Is buying a home in Canada, and specifically the Greater Vancouver area, about to get easier? Well, our government in just a few days is going to be rolling out some pretty big changes to the mortgage rules, and the idea is to make it easier for buyers to be able to get into the market. But what are these changes? How are they going to affect you? And how do these changes affect the outlook for real estate here in 2025? Well, let's jump in and take a look. Hi, I'm Damian Marks, your real estate expert here in the Greater Vancouver area. If you've been thinking about buying a home or even selling one, these policy changes are going to have an impact. So like I mentioned earlier, we're going to be discussing the policy changes and how they're going to affect affordability, as well as the impact that they're going to have on first-time home buyers. So grab a coffee, sit down, and now let's dive into it. Okay, and the big date we're going to want to have circled on our calendars is December 15th. So that's just 5 days away. There are going to be two big changes happening, and the first change is going to apply to how long of an amortization period you can get. This is going to be extended. The other change happening is the threshold for what constitutes an insured mortgage. This is going to be raised from $1 million up to $1.5 million. So let's break down what these changes mean and what do they look like. So, extended amortization period for first-time home buyers. Currently, when you go to get a mortgage, you can get an amortization period up to 25 years. With these changes, you're going to be able to, as a first-time buyer or somebody who is purchasing new construction, extend that amortization period to 30 years. What this is going to do is this is going to actually lower your monthly payments and will actually give you some more purchasing power. It's estimated that it's going to increase your purchasing power by about 9%. Now that being said, it's not all rosy. It does mean if you amortize for 30 years and actually take the 30 years to pay back that mortgage, that you will have actually paid more interest over the long run. But generally, if you're doing things properly, you don't need the full 30 years to pay off the mortgage. So yeah, a bit of a mixed bag there. The second big change is an increase to the cap for insured mortgages. And this is actually pretty big, especially in high-cost markets like the Greater Vancouver area. Currently, if you wanted to buy a home, let's say that costs over $1 million, you're going to need to have 20% down. Under the new rules, that number is actually increased up to 1.5. So let's say today you were looking at buying a home that cost $1.2 million in New West. You would need to have about $240,000 for a down payment. And for a lot of people, that's, unless they already own something, that's really hard to come up with. Under the new rules, you could actually purchase that home, but your minimum down payment would be $95,000. And this will open up a lot of homes to a lot of people. That being said, you do still need to be able to income qualify to receive these benefits. This may actually come as a bit of a surprise, but 20% of homes in Canada are generally falling in between the price range of $1 million up to $1.5 million. So it is going to open the door for a lot of people to get into these homes, especially, like I said, in high-cost areas like the Greater Vancouver area and the Greater Toronto area. So who's going to benefit the most from these changes? Well, obviously in this instance, it's going to be first-time home buyers that are going to see the greatest benefit from this. One thing to keep in mind though is it's about 44% of buyers in the market are first-time home buyers, and even of the total amount, only 20% of all mortgages taken are insured mortgages. So the strongest and primary benefits of these changes is only going to be available to a smaller section of the market. But even if you don't fall into a first-time home buyer category, you can still take advantage of the higher insured mortgage thresholds. And I think that's probably going to have the largest impact on the state of the market going into next year. What impact are these policy changes going to have on the market in 2025? Well, if you've been paying attention to the market at all for the last few months, you will have actually probably taken note that buyer demand for the last 3 months has steadily been present, with a 30% increase in buyer activity year over year. And those are active buyers, so people finally getting off the sidelines and getting into the market. We're also expecting a rate cut later this month, and maybe even a jumbo rate cut. If you see that, I would expect even more people to stop with the wait and see mentality and actually look to get into the market, because as you know, as sales start to increase and inventory starts to diminish, you see upward pressure on prices. This will be further compounded by these new policy changes. In fact, TD Bank is expecting housing prices, at least in the first half of 2025, to increase anywhere from 2 to 4%. There are some concerns about affordability, however, as the increase in prices is going to erode away some of the initial benefits of the policy changes. Of course, I don't have a crystal ball, but I wouldn't be shocked if we did see upward pressure on housing prices as we head into the spring market. That being said, anytime you are getting into real estate, there always are risks and challenges involved, and there are some potential downsides to taking an extended amortization period. The main one being, this will generally lead to people taking on more debt. Just because it's easier for you to buy up to $1.5 million doesn't necessarily mean that you should be buying up to $1.5 million. On the chart just off to the side here, it's going to show, the risk of financial hardship according to loan-to-value ratio. This chart is especially prudent for those who may experience, changes in their life. That could be, loss of a job. It could be increased cost of living. It could also involve, maybe expanding your family and having a higher cost there. Generally, people with a higher loan-to-value ratio are at a higher risk of experiencing financial hardship if their circumstances do change. Anytime you are getting real estate, it is really important. This means that it's crucial for buyers who are getting into the market to really carefully look at their financial situation and obviously do their best to ensure and plan for any sort of road bumps or changes that may happen in the future. What does this mean for you? And the bottom line is that this is going to make buying a home a little bit easier, and that first-time home buyers, as well as people looking to buy higher-priced homes, are going to see the most benefit. But that doesn't mean it doesn't come without trade-offs. And those trade-offs are going to be higher home prices, more long-term debt, and not everybody is actually going to be able to benefit from these changes. Are you planning to buy a home in 2025, or maybe even thinking about selling one? Will these mortgage changes actually be a benefit to buyers who are planning to enter the market? I'd love to hear your thoughts down below. And if you are planning on making a move, reach out to myself and my team. We'd love to help you navigate this shifting market. And if you found the information in this video helpful, I would love a like and a subscribe, or please feel free to share it with somebody who you think might benefit from it. And as always, I'll see you in the next one.